Hey everyone, Nick Shaheen here, doing something fun today, looking at Robinhood stocks by popularity. I'm not like CNBC where they look at it as an investment. This is an opportunity to look over some charts and maybe help some people with the technicals. All right, here's the list as of today. What's today? 7/22. First day back from vacation in Cancun. Day one of self-quarantine. No Rona symptoms yet. Okay, so Ford, GE, American, Disney. All right, let's run through them one at a time. I'm going to move this out of the way. All right, so Ford, I'm already long. It's already really profitable. My thesis was easy. They've messed it up so long, they can hardly continue to messing it up. Odds are with them. So, using the trade I shared with the members is positive by a lot, and I could stay in it. The bet is that eventually it will fall back into favor. Management has been sucking wind for such a long time. Odds are ... So technically, it failed at 7-ish, so that's the hurdle to overcome. It has been setting higher low, that's good news. It's constructive, that means it's the hands of the buyers. The more exciting news would be if they can break from this prior fail. This was a very sharp, pointy place in time where they failed, and it wasn't a coincidence. If you look left, that was the start of a big chasm. So that will be an exciting line to reach, and my trade will be super profitable, and probably I'll trim some of it then. Until then, I'm long. The stock is exciting, and it's in the buyer's hands, and dips towards 6.3-ish are buyable for the short term, given that the macro environment stays the same. GE, it's a mystery to everybody, but it's still a massive company, so they're still relevant. And almost like Ford, they have been disappointing everybody on every corner. So this is a weekly chart for about, 5 years worth of data. Oh my gosh, the damage. So December Christmas crash, where the whole market fell, COVID crash, and they're still just above that. So the one good thing about having a couple crashes like that, these are tough tests. This one, none tougher than like the toughest I've ever seen. Literally, the world stopped working. That hasn't happened before in modern times. So it's as good a bottom as you can get. So when there's a good bottom, then the upside, as unlikely as it is the more likely outcome, right? So it's easy. Let's put it this way: it's easier to go up when you have a solid bottom below. The bulls are more courageous. Higher lows, almost like Ford, it needs to trigger, and this would be one trigger. I put an alert here, but I would also say that there are prior fails at 750 and 775, and of course at this level here. So, but it's exciting to see higher lows. If I'm long the stock, it's too long. It's too late to get out. Then you would have the headline screaming over it and fighting over it, TUSA and company. There are no experts in this stock, so just play the chart, and I think you'll be fine. Let me see here. As far as fundamentals, do we have anything? It sells at 0.6 its full year sales. So price to earnings is 10. It's not going to be a financial debacle, given what we know right now, to own the stock long term. So where's the incentive to bail on it or short it? I don't see it. All right, so this is a group that I'm super scared about. I just flew, right? I went overseas. I flew United. My flights were packed, and I mean like oversold. But the airports are freaking empty. I posted a picture of the Houston airport when I flew back. I could have driven a car and done donuts in there and not hit one person with my eyes closed. We had like 35, 30, maybe 40 TSA agents at the luggage check station when I went from one leg to another leg, from the international to the domestic leg, and we were the only 3 people in line. I literally could have, and as far as the passport area, I could have thrown my passport, kept on walking. They could have thrown it back to me, and I wouldn't even need to stop. It was just insane. Really scared about the travel. Plus, if you look at the TSA screenings, they're still down 73%. I checked yesterday to last year. So yes, they have 700,000 screenings, but they were like almost 3 million last year, 2.8, I think. I don't know, something like that. So they're still beaten down. And they struck a deal, according to the pilot with the FAA, that they will block 3 goddamn seats. That's their solution for social distancing. 3 seats on the whole plane. I think in the coach. I couldn't believe it. It sounded like a joke. So our governor in California doesn't trust me to stand outside in open air next to my friend 5 feet apart, not 6. Yet he trusts me to rub shoulders with a complete stranger for 5 hours straight and breathe the same air. It's freaking insane. So politics is playing a big role, and we will not know the truth until after November, because then all the incentives from politicians go away, so will the stimulus. And then, as they say, we will know who's swimming without a bathing suit. So be careful being long airlines too long into the year. My opinion, there's a lot of pain in the P&L, and they're taking on debt. So I would play with the risky ones, JetBlue and Southwest. My personal opinion. Okay, Disney, same concept. It's a crowd company, so I like the fact that it's ping-ponging between these two lines. So as long as it's between 115 and 122.50, I kind of know what's going on, and it's teetering around this line, 117-ish. So the buyers are in charge, higher lows. I like it. We have a lot of question marks for it, but this is freaking Disney, people, so they'll figure it out. A drop towards 100 is a blind buy, in my opinion. I could sell puts there too for income. All right, that's Disney. If you don't know what that is, join the group. Link down below, by the way. Okay, so who are we at? Delta. Same comments as American, so no need to stand there too long. Apple. Oh my gosh. Okay. Can't trade it. Have to own it. Well, he's right. I hate to say it, but if I'm starting a new position in Apple, I'm definitely not starting it here. I'm okay for it to rally 20-30% from here. It's not going to take my money. Only way I would bet on it is by selling puts around this zone here, and that's it. Because I'm definitely too late, and should the shit hit the fan at any point in time here soon, you're going to be holding a bag. Great company. Not cheap. People say it's cheap. It's not cheap. Relative to itself, it is super expensive. But the argument there is that this is a different company. It's not product-based, blah, 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 blah. This is almost twice as expensive as Amazon from a price to sales. Well, it used to be. I haven't checked Amazon in a while, so I should probably. Well, let's do it right now. Not from the chart, from that statistics only. It used to be 4, 3.5 to 4. As far as, where is it? Oh my gosh. More financials. There we go. Okay, so it's 20%, 30% cheaper than Amazon still. I mean, more expensive than Amazon, Apple. So there are better places to go long Apple, and I just mentioned them. Microsoft reports earnings tonight, so no need of me saying anything. If I were to bet any which way, I'll bet up because the Bulls have been winning, so why even bother? But just like Apple, it's too high for my taste. However, this is a service company now, SAS, well, software as a service, basically. They made the turn quickly, but they also have the games and all of that, so it's pretty exciting. Oh, and they have the COVID aspect of Teams. I think there's some lawsuits today with Teams and Slack. So I would rather own this than Zoom video. How about that? Okay, so Tesla. Oh, as far as levels, all these orange lines are buy to dip levels. It depends on your where do you want to get long. I think ideally I'd love to see 175. This is where I'd buy the dip blindly. These two candles are interesting, so I think if we have a market crash, I'm not calling for one, but if we have a market crash, this is when they'll go first, I think. So don't say, this idiot is calling Microsoft to fall to 165 or whatever. I'm not. I'm saying if we have a market crash, and they do happen. Remember, we fell 7% one day not too long ago? It could happen. Well, this is where the money is. That's my opinion. All this is still not established. The base is down here. This line is where they bought and sold the most. See, all these volume bars, most of them by a long shot are here for the past 2 years. Here. What does that mean? The stock has a lot of consolidation to do. What does that mean? Chop, 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 back and fill, back and fill. So they can move that line up. See, watch, if I zoom in, that line should move up. Because that's recent history. So it's been trading up here. So anyway, it has a lot of maturing to do. You can't just go up to the moon and not consolidate a little bit. Tesla, another coin flip, reports. No need talking. Of course, it's too high, but I call it THTH. It's too high to short, and too hot to short, and too high to chase. So if you're not on board, it's a tough swallow. But hey, they tell you it's not a car company. Where the hell are the other headlines? I think it has like 1 or 2% of part of its sales that is not a car company. So far, it is a freaking car company. I don't care what you think. Long term, the thesis, okay, it may not be a car company, but I've yet to see it. So eyeball eyeball, this is a level to look at. So let's put a line right there. I don't know why there isn't one here. And it's not a thin line in the sand, it's an area. And sure, it's the 3-digit number. So you can see they wall, and then boom, insane, right? The stock is acting super, I mean, it's gorgeous, but from an investment perspective, damn, you know? Anyway, not for me at this level. CCL, definitely not for me as an industry. If I don't like airlines, I definitely do not like this bunch because they're even worse than the airlines. Technically speaking, oh, I know, I'm going to get some Robinhood traders right here cussing me out probably. I cannot win that fight, I tell you that. If they're all like Portnoy or whatever his name is, I definitely do not want to be on the other side of that mouth. Okay, so let's see here. That would be an uh-oh moment below that. And this would be the excitement above that. And it's not a hard line in the sand here because there's another fail here and another fail here. So it's a zone. So anywhere up here, I'd book profits. Anywhere down here, I try to buy the dip with a tight stop. Because if it falls below that, it's going much lower. Last one, GPRO. GoPro. I can't believe it's in the top 10. It's like, what the GoPro? Okay, why do you say I said that? How about this? This is a stock I would never look at. Ever. From here to here, why am I bothering? It's not going back to here, that's for sure. I remember I wrote an article about shorting GoPro at 90 because I read an article that prompted me to write the article. The headline was, the meme was, this is the YouTube killer. I just lost about a YouTube killer of over 1 billion user, and this freaking camera company that competes with every freaking waterproof phone on the planet. No way. That was it. That was the end of it. Anyway, back to reality. Recently, better price action than its overall long term. Nice rally off the bottom. The buyers are buying every dip, and they're struggling against the cap. So I like level breaches. So if it breaks this level, I see upside. This is not the limits to the upside, just to show the upside. Okay, versus the trend that is ongoing, which is, come on, what the hell? Okay, what's wrong? Trading view, bug. Okay, so higher lows. So there's going to be an action. Either revert and test this zone, the base that serves for this, or break out from this. Some people like to chase the breakout of a trend. So they will chase it from here. They will say, oh, it broke out, from the trend. I prefer to miss out on this little bit and not get faked out by this fail right there. Another fail. So be careful. It's a nice, whatever you want to call it, triangle, flag, higher lows, knocking on a roof. If the bulls are able to break through the roof, they will overshoot higher. Now there's an earnings coming, so that makes it a coin flip. If you think what's going to happen on the earnings because of you think it's sold more cameras or whatever, don't kid yourself. The reaction for the earnings is a complete coin flip. The CEO themselves will not be able to tell you how the stock will move the next day, and they have a P&L on the balance sheet and a statement in front of them. They couldn't guess what the investors are expecting. All right, so this is a rundown through the top 10 stocks on Robinhood. I don't have anything against Robinhood. I didn't mean to make anything sound derogatory against somebody who's trading Robinhood. I have a lot of friends who do that. It's just that the meme on CNBC makes it sound like it's a genius way to do it, to follow Robinhood. Now, this is the environment that's making the Robinhood trades successful, because money is chasing risk right now because of the TINA effect. There's no return anywhere else. Growth is the only place that there is return, and growth is risk. So Zoom is a growth company. So there's nothing riskier than being long Zoom long term. Why? I'll tell it to you in plain simple English. Again, nothing against the company. So if I go to Amazon, I want to buy his company. I say, Mr. Bezos, I'd like to buy your company today. Here's 6 times your total sale. I'll pay you 6 years worth of revenues, worth of yearly sales right now to buy your company. He'll probably laugh me out, right? Well, that's what currently the price is. The stock is priced at. The stock price is 6 times ish. We just looked at that number. Is full year sales. In this company, It's 110 years. So if I go to a Zoom company and I say, I'd like to buy you out, and I'll offer you 6 times, they'll laugh at me. They'll say, the stock market already is giving me 110 years. You want to give me 6? So that's how much hope there is in the stock. If you buy a share, you're prepaying, you're agreeing to buy them out for 110 years worth of sales today. So how much more sales do you expect that's going to come from this increase in users? I use it, my whole family use it, not one of us pay a dime to it. The minute they ask us to pay something, we'll switch. We have many other ways to do free video calling than this. I understand businesses will have to stick to something. Google is a business, they provide it. Microsoft provides it. Facebook provides it. You may favor Zoom, but it's not the only alternative. And 110 years worth of sales price into one stock right here, right now, at all-time highs with 11 million people out of work, it just sounds a little risky, right? That's why money is flocking into it. So, risky behavior, there's high risk, high reward. So that's why the Robinhood trades are working right now, but that ends on a dime. So be prepared, be hedged, be balanced. Don't short outright these tough stocks like that. I tried and lost, so there's no need. You can just go with the flow and be protected. Nick signing out.